Okay, so you sent over some articles about this whole U.S. debt thing, and wow, uh, I got to say the numbers are pretty alarming.
Yeah, it's a lot to unpack for sure.
Trillions of dollars is kind of hard to wrap your head around, you know? And then we're going to throw Bitcoin into the mix, too. This is going to be good.
It's all connected, believe it or not.
All right, well, I'm ready to dive in. Help me out here. What's the real story with all this?
Well, it's definitely a tangled web, but understanding how it all connects is super important,
Yeah.
especially for your own, financial well-being.
Right. Got to protect ourselves out of it.
Exactly. And let's start with that staggering $4.7 trillion increase in the national debt over just 2 years. You mentioned that, right?
Yeah, the article said it jumped up by that much in just 2 years.
It's crazy. This isn't just some abstract number. It's a sign a system that could be spiraling. And that impacts everything, from the taxes we pay to the value of our savings.
Okay, so you're talking about a debt spiral, right?
hmm
The article mentioned that. I kind of get the basic idea, but can you paint a picture for me? How does this actually play out and what makes it so dangerous?
Okay, imagine this. You're only paying like the minimum on your credit card each month, so you're technically keeping up, but the balance barely shrinks because of the mounting interest.
Oof, yeah, I know that feeling.
And that's a debt spiral in a nutshell. It's the same trap a lot of countries fall into. We spend more than we bring in through taxes, so we issue bonds to borrow money, promising to pay it back with interest. But as the debt grows, so does the interest, which eats up more and more of our budget. The article highlighted that we're now spending, get this, $900 billion annually just on interest payments alone.
Whoa, 900 billion just on
Yeah.
interest.
Yeah, that's like the entire GDP of some countries.
Seriously, imagine if we could take that money and put it towards like education or infrastructure.
Right.
That pothole on Elm Street that's been there since I was a kid, gone.
Exactly. That's the real cost of this whole debt spiral thing. It's not just numbers on a balance sheet, it's resources that could be used for essential services. It impacts our lives in very real ways.
Yeah, that's a really good point. And then the article went on to talk about hyperinflation, and
Yeah.
well, that's when I really started to get nervous.
Yeah, it's kind of scary when you start thinking about it.
They give some pretty scary examples too. Zimbabwe, Argentina. Is the U.S. really headed down that path? And what would that even look like for, everyday Americans?
Hyperinflation is definitely a complex issue, but the risks are definitely worth taking seriously. You mentioned those historical examples, and they're in there for a reason. They illustrate what can happen when a government tries to print its way out of debt. It's called debt monetization.
So if they just print more money to pay off the debt,
Exactly. It seems like it makes sense on the surface, but if you flood the market with more and more money, but there's no increase in goods and services to back it up.
then the value of the dollar goes down, right?
Right, right. The value of each dollar plummets, your purchasing power evaporates, and suddenly everything costs more. That morning coffee you get every day costs twice as much now.
Okay, yeah, suddenly my daily coffee is looking like a luxury. I see what you're saying. It's not just about numbers. It's about how those numbers actually affect people's lives.
You got it. It's about your savings losing value, your paycheck not stretching as far, basic necessities becoming more and more out of reach.
So what can people do?
Well, the U.S. isn't Zimbabwe or anything, but even moderate inflation eats away at the value of your hard-earned money. The article mentioned diversifying your savings with assets like gold.
Isn't that a little extreme?
Maybe, maybe not. Think of it as a safety net, a way to potentially protect yourself if the dollar starts losing its purchasing power.
Okay, that makes sense. And that brings us to that other part of the article, the Bitcoin thing.
Right, right.
That's where I really started to get skeptical. How can a digital currency solve a real-world debt crisis?
Yeah.
It felt like trying to pay off my mortgage with monopoly money.
I know, it seems kind of far out there, right?
Yeah.
But it's not as crazy as it might sound at first. Bitcoin operates on a completely different system than the US dollar. And understanding these differences is key to grasping why some people find it so appealing.
Especially now with all this economic uncertainty.
Exactly.
So walk me through this. What makes Bitcoin so different from the US dollar? It's still just ones and zeros on a computer somewhere.
That's where things get interesting. Unlike the dollar, which, like we've been talking about, the government can print endlessly, which could lead to inflation, right? Bitcoin has a fixed supply. There are only ever going to be 21 million Bitcoin in existence.
Oh, okay.
That's it. No more can ever be created.
So I'm starting to see where this is going. Limited supply, like a rare baseball card or something. That means if more people want it,
The price goes up. You
Exactly.
got it. And because it's decentralized, meaning no single entity controls it, like a government or a bank.
It can't be manipulated.
Right. Bitcoin is immune to government manipulation.
Right.
This is why some people, like that James Lavish guy the article mentioned, view it as a safe haven from inflation and economic turmoil. They see it as a way to protect their wealth if things really hit the fan.
Interesting. So instead of my savings slowly losing value in my bank account with inflation, I could potentially buy some Bitcoin that might hold its value better. I mean, it's still a risk, right?
Of course.
Hmm.
There are no guarantees with anything in finance, and Bitcoin is no exception. It's volatile, it goes up and down in value quickly, and it's still a relatively new technology. There are definitely risks.
For sure. And the article even mentioned something about governments potentially trying to regulate Bitcoin.
Yeah, that's true. Governments around the world are trying to figure out how to regulate cryptocurrencies like Bitcoin. Some see it as a threat, others see it as a useful tool. How these regulations unfold will definitely have a big impact on Bitcoin's future, that's for sure.
Yeah, could be a whole other deep dive right there.
Def
But before we go too far down that rabbit hole, the article also mentioned this other thing, CBDCs. I'm not going to lie, they sound a little bit scary.
Yeah, they're pretty different from Bitcoin. CBDCs, which stands for central bank digital currencies, are basically just digital versions of existing government-issued currencies. So like a digital dollar, controlled by the Federal Reserve here in the US.
Okay, so instead of carrying around paper money, you'd have it all on your phone or whatever.
Exactly. And on the surface, they seem, I don't know, convenient. Faster transactions, lower costs, maybe even a way to streamline social programs. But there's a potential downside that worries some people.
Okay, I'm sensing a but coming,
Yeah.
and I'm guessing it's not good.
You got it. Remember how we talked about the potential for governments to just print more money and how that could lead to inflation?
Yeah.
Well, with CBDCs, they could track every single transaction you make. Imagine a world where the government knows exactly how you're spending your money.
Whoa, that's a little Big Brother-ish, isn't it? That's some Black Mirror stuff right there.
That's what people are worried about. It's a whole different level of financial control. With Bitcoin, you have this decentralized system that operates outside of government control. But with CBDCs, it's basically the government taking digital control of the money supply.
So with Bitcoin, you have more freedom, but maybe less security. And with CBDCs, it's the opposite.
You got it. It's about control versus freedom. Bitcoin gives you the potential for more control over your own money, but it's also more volatile.
Oh.
CBDCs might seem more stable at first, but you might be giving up some privacy and financial control.
Wow, okay. So we've got this growing national debt, the threat of inflation, and now these two very different paths for the future of money. Bitcoin, which is decentralized and volatile, and CBDCs, which are centralized and potentially, well, a little bit scary. A lot to unpack here.
It really is. And choosing between those paths or even finding some kind of middle ground that's going to be one of the biggest economic challenges of our time, it's about more than just money. It's about the very nature of value, trust, and who we want to control the flow of money in our increasingly digital world.
It's a lot to take in,
Mhm.
right? I mean, the whole idea that the future of money might look totally different than what we're used to, it's kind of mind-blowing.
Yeah, it can definitely feel overwhelming.
I will say, though, even with all the potential risks, there's a part of me that finds this idea of Bitcoin, this decentralized system, kind of exciting, you know?
I get it.
Maybe it's the control freak in me,
Yeah.
or maybe it's just that I like the idea of having some way to protect myself if things go really bad.
It's a natural reaction. People are looking for some kind of certainty, some way to secure their future, especially when it feels like the world is kind of unpredictable, right?
Right, exactly.
And Bitcoin, with all its ups and downs, it represents this idea of taking control, of not having to rely on governments or banks, you know? It's your money, your responsibility.
It's like the Wild West, but for money.
Yeah.
Speaking of banks, though, what happens to them if everyone just decides to start using Bitcoin? What happens to the whole banking system?
That's the million-dollar question. We're already seeing these new ways of dealing with money popping up, like cryptocurrency exchanges and decentralized finance platforms, things like that. And they operate completely outside the traditional banking system.
Wow, so they're totally separate.
Totally. Now, whether these alternatives can completely replace banks as we know them, well, that remains to be seen. And the banks themselves are starting to pay attention. A lot of them are exploring this whole blockchain thing, and some are even offering services related to cryptocurrency.
So they're trying to adapt. They see the writing on the wall.
Exactly. It's going to be fascinating to see how it all plays out.
It really is. It's like this whole financial system is evolving right before our eyes. It's kind of amazing. But before we wrap up, let's bring this back to the listener for a second. So you're listening to all this. Maybe you're feeling a little overwhelmed, maybe even a little bit scared. What should you be doing with this information?
The most important thing is to educate yourself. Don't just ignore this stuff because it seems too complex or too technical. This is about your money, your future. Read those articles again and actually dive into the concepts we talked about. The more you understand, the better prepared you'll be to navigate this whole new financial landscape.
Couldn't have said it better myself.
Yeah.
Knowledge is power, after all.
Mhm.
Big thanks to you for joining me today and breaking all of this down. This has been a really eye-opening deep dive for me, that's for sure. And for everyone listening, we want to hear from you. What are your thoughts on Bitcoin, CBDCs, the future of money? Hit us up on our socials. Let's keep this conversation going. Until next time, stay curious.